Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, August 16th, 2010. Well, folks, the markets are in a little bit of a snooze, really flat on the day. The SPY, which again mirrors the S&P 500, that is what you are looking at in front of you, and you can see it's just fractionally down, kind of trying to break down through this white trend line after recapturing it earlier in the day. And again, this is the 108.30 level. We are down 6 cents on the SPY. So again, 6 cents on the SPY, which is priced at 108.25, is really nothing to be talked about in relation to how big of a move it is. It's a very, very small move at this point, and we have to recognize that. Now, the bigger thing to me is going to be, do we close below the 108.30 level, technically speaking? That's going to be more of a pivot point. And then at that point, what we need to look for is, do we get below the blue trend line down here at 107.60? Now, why is that 107.60 level so important, and why did we talk about it this morning in the intraday stock chat and give everyone a heads up? By the way, market is selling just a little bit here, breaking down just a tiny bit on the Monday afternoon. Basically, folks, if I zoom out on this chart, you can see that going back to last Thursday, we gapped lower to this 107.60 level and reversed and got in that range. Now, remember, the range goes basically from this point here at 108.30 to 109. So again, you can see the gap down here, the roar up. It recaptures the 108.30 level and just plays ping pong or pinball between the 108.30 and the 109 level. Up, down, up, down, up, down, up, down. Then today, going into Monday, we had a big gap down in the markets. Now, why was there a big gap down? Basically, what ended up happening, folks, is we had some bad news out of Japan. Japan GDP dropped more than expected, quite a bit more. In fact, China looks like it has now taken over as the second biggest economy in the world. And again, that caused the market to be very weak overnight. Then you had some key manufacturing data this morning that was not stellar by any stretch, and also housing data coming out. So the compilation of the Japanese news and the U.S. news made for a very, very weak open. But what you need to always remember on Fridays and Mondays is that the volume in August is going to be extremely light. And that has a tendency basically to make the markets rebound higher and basically move higher. Now, why would it go up? Well, light volume, again, always dictates the upside bias or neutral bias. And the reasoning behind that is you have the average investor being one of the main players that's trading the market. When the volume's heavy, it's not the average investor. It's not the retail trader. Who it is, it's actually the institutions. Institutions make up a ton of volume and heavy volume. If you have heavy volume, and let's say we do 300 million on the SPY, you can bet that 250 to 200 and a quarter of that is institutional volume. But when they're not playing in the markets, you just have the natural upside positive sentiment of the retail investor. All right, now remember, the key to remember always with that retail investor being positive is, why is a retail investor positive? People inherently are positive. If you don't, or if you're not positive and you're depressed or negative, what do? They medicate you to make you positive. So always remember that has the general tendency to keep the markets floating in light volume. That's exactly what we're having today. In addition, look at this. If we zoom in here, so folks, just recognize this 108.60 level here, the 107 blue line 60 level. And if we zoom in here, what I want you guys to see is that you gapped right to that level, flushed, taking out the weak hands, and then recovered and closed above that line. As soon as you recovered and closed above that line, you had a bottoming tail in play. Bottoming tail, see the long tail there? That is a bullish signal. Plus you closed back above the blue line. That close above is very significant because it tells you that, again, the level of 107.60 was never broken. It was pierced, but it was never closed below. That's another positive bias, and again, sure enough, the market yields to the upside. Up move, pause, up, right into that upper level. Now, 108.30, that was your short-term resistance level. Technically, it wasn't a major level of resistance because we had never confirmed to the downside below, but you can see it hits it, pauses, gets above, pulls back, goes back below, gets back above. Now it finally gets above, and now it's floating back below. So really, you're just hovering around this 108.30 level. And one thing you have to note here, and again, we talked about this, or I talked about this with my partner, Chief Market Strategist Nick Santiago. One thing that you have to recognize here, folks, is that the market, again, we nailed that turn date last week. That was dead on. We've talked about the 108.30 level as being a very, very pivotal level in the markets. But again, if you look at the volume today, you would say, okay, volume is extremely light. Shouldn't the markets be up a little bit more? And I would happen to agree with that. The fact is, you see the markets flat to slightly negative right now, and that has to tell us that going into the next few days to be a little bit on caution. All right. Basically, again, if you have this type of light volume, you should be floating neutral to slight upside, not neutral to slight downside. And again, market having a lot of trouble holding on to any sort of gain today, or even the flat line in this type of environment. Granted, it is still flat, but it's not having very much success on going any higher on the light volume. So keep an eye on that, folks. I do think that is significant. If we flip to the couple other charts here, I want to take a look, and I think this is very important. Notice the dollar is upticking. This is the dollar chart today, folks. And again, we've just been nailing the calls out of the park. The turn date last week, we nailed it to the day. In addition, as of Friday, I put out an alert in the Hot Charts and Alerts, and I discussed it on the Friday Night Nightly video in the Research Center, that you have now a negative bias. I went to a negative bias on the dollar. Dollar today getting hit to the downside. It's inching up a little bit, but you can see the dollar, again, is definitely down. This is where the dollar closed on Friday, and this is where you're currently trading. So you can see, without a doubt, there is downside from here down to here on the dollar. A pretty nice, solid drop back down. So that call was nailed, and again, we'll continue to watch some of the other commodities out there. Let's take a look at the oil chart. Oil is basically flat on the day. It's hovering right on a major support level down here. We also talked about that in the Hot Charts and Alerts and in the nightly video. And sure enough, the GLD is getting a continued upside move here. This is the intraday. You can see a nice little gap up from this point right here all the way now trading up here on the GLD on gold. Why would gold be going up? Because it's instability. Remember, the news out of Japan is not good. A lot of people are very fearful about Europe again. You're starting to get that little bit of nervousness in the air, and that means people are going to rush to the safety of gold. Gold, again, is a safety commodity, unlike oil. Oil is a demand-driven and inflation-driven commodity. It's totally different. Even though they technically both are commodities, one is way different on how it reacts and so forth, all right? All right, folks, what else do we want to discuss here? Chevron today, a little bit of a flattish, slightly up move. It gapped lower, and then Chevron made a big push up, and now it's just hovering sideways. You can see it just hit the 20 moving average. Let's take a look at Exxon. ExxonMobil, again, gapping down but coming back just around the flat line, has slowly faded a little bit. Apple Computer, Apple's down 65 cents today on the day. And again, one thing of interest, folks, is the last week, really, NASDAQ was the weakest index. It is the strongest today. NASDAQ is up 10 points. S&P is down 27 cents, which again shows you how flat the market is. And the Dow is down about 7 points. So again, it still looks like that flattish day. That's exactly, by the way, what we called for on Friday. Said Monday, most likely a flattish day. Flat means up or down 50 on the Dow to keep us in check. And again, we'll see where the market ends today and what ends up happening. But again, it's all about making money. Hot Charts and Alerts. I took another swing trade off the table for a 10% profit. We just continue to knock it out of the park. Also on the Pro Trader watch list, another great gainer. I gave this one out on the Hot Charts and Pro Trader watch list on Friday, right in this area. And again, if you take a look at the daily chart, it was just due for a technical bounce, and a big technical bounce here. Basically a 10% gainer off of the Pro Trader as well, off alerting people that a lot of the traders here at In the Money Stocks were looking at that very closely for a pop, and it sure got the pop today. So some good calls out there continuing. Money to be made, folks. I don't care if the market's up or down for the week. Money is there to be made, and I will be making it. Take care. Have a great rest of the day. Come join us at inthemoneystocks.com. Talk to you soon.